The Kenya Bankers Association has defended their delay in reducing lending rates to borrowers, even though the Central Bank of Kenya lowered its base lending rate 3 consecutive times over the last 6 months. While committing to lowering lending rates this month of December, they say that while the CBK cuts would reduce the cost of borrowing by government, this is not immediately applicable to customers whose risk is determined by other market conditions. And as Jimmy Mbogo now reports, the benefits of the recent rate cut by the CBK to 11.25% may take a while to trickle down to individual borrowers.
Borrowers will have nothing to smile about despite the third round of monetary easing that saw the Central Bank of Kenya cut rates to 11.25%. Banking sector analysts say the lowered central bank rate will have minimal effect on existing credit facilities, which will continue to attract higher interest rates, while the risk-based pricing model will determine the interest charged to new facilities.
There are very many moving parts to the risk-based pricing model. Another factor to that is that timing. There's a timing lag, which means that banks took, let's say, maybe they took 6-month deposits at the time when the rate was high. So they have to wait for that deposit to mature. They can't break the contract. So by the time the higher priced deposits are outweighing the lower cost deposit, it's going to take a while.
What we're experiencing is a short-term impatience in the market. We should give it at least about 6 months, and we would be having a significantly lower rates by most banks. That lag period, like I said, most banks will justify it by their funded costs and the costs of funds so far.
Central Bank Governor has urged banks to pass on the benefit to customers.
When Central Bank raised the policy rate, the banks were very quick to raise their lending rates. All we are asking is for the banks to be fair and to act in the same way that they were quick to raise lending rates.
Analysts, however, say CBK needs to do more to ensure this happens.
If the CBK wants to spur banks into lending out to the private sector, as I've mentioned, it's cutting the rates. Another aspect might be to just have a look at and review the models that the banks are using to find out what inputs are they actually using to gauge what they're lending out to clients.
Now, for a lot of Kenyans who have been able to access credit from a financial institution, the process will involve sitting at a position like this as you fill your documents. And with rates coming down, for most of us, you would be hoping that this would translate to the rates that you get from your bank. However, according to experts, despite the central bank rate being lowered, it will take a couple of months before Kenyan borrowers will experience these low interest rates on their loans. Jimmy Mbogo, Citizen TV, Nairobi.